the main thing we've seen in the market the past several months has been the increase in capital available to lend. Generally, we've been in a low interest rate environment, which means lenders' ability to access capital has been pretty good. Having said that, one thing we've definitely seen is that at deal sizes $5 million and above, lenders tend to tap out. Generally, just because of the deal size, lenders don't want to allocate too much of their balance sheet to the bigger deals. We think that presents great opportunities to lenders with ambition to grow, because they're very good deals at sort of the $5 to $10 million space. Typically the security is very good, the quality of the borrower is good, the project could be good, there's often a very good exit. And when deals are presented, many lenders have to turn them down just because the concentration would require that the deal ends up being too big a share of the lender's balance sheet. So we think there's quite a lot of concentration in that, call it $2 to $5 million space, quite a lot of competition among lenders, but we think it's pretty wide open above that. And we think that for lenders who have ambition to occupy that space, we think it presents a very good opportunity. We think short-term lending is an incredibly important part of the lending landscape and, by extension, the broker landscape. Essentially, we view short-term lending as the liquidity and the lubricant, if you like, that just keeps the wheels of finance turning. In many cases, you have good borrowers and good projects and well-established long-term lenders, but the missing bit in the middle is often a timing gap or a circumstance gap or a situation gap, which requires some short-term lending just to get the borrower from where they are to where they need to be. So, brokers come to us with very good transactions that are due to be funded by, say, the major banks, but for whatever reason, there could be a 30 or a 60-day delay from where they are to when the bank is ultimately able to advance the funds. And it's an opportunity which doesn't want to be lost because of that gap, and that's where short-term lending plays an important role. So we think it's incredibly important that brokers know it and understand it, that they're aware that it exists, so that when they see the requirements to effectively to bridge a borrower from where they are to where they need to get to, they know that they can access the short-term lending market and they understand how it works and how it can help them. We'd say to brokers, look at short-term lending as part of your overall suite of funding options, and importantly, don't get too focused on the absolute dollar cost of short-term loans. Very much think about loans in the context of the overall transaction for the client and what you're trying to do for the client. Often we see situations where a client has got themselves into a situation where they're not bankable with a major right now. It might be tax returns not done, it might be tax debt yet to be paid, it might be any other sort of serviceability issue, it might be they're waiting funds from another transaction, but ultimately they'd be a very good long-term borrower from a major lender, and they need the help of short-term lending to get them from where they are to where they need to get to. So what we would say to brokers is, look at where your client is today, look at ultimately where you want to get them to, try and understand what the impediment is, and if short-term lending can solve the problem for you, don't get too focused on what the absolute dollar cost of the loan is. Think about the overall solution, what the overall solution is for the clients, and how short-term lending can help to get them there.